Sign up today for a 7-day free trial at alerts.chartguys.com. Hey everyone, we're going to split up the MJ videos because I don't want to talk for a half hour in a row. We're going to do Canada first, then we'll do the US names in a separate video. So we had a lot of weakness in the overall market today. If you've been watching the market videos, you know I've been talking about the importance of the $60 level on oil. We were oversold when we broke it, and we still dumped about 4% plus after that point. It was a huge red day on oil that had big implications on market weakness as well, and now we're seeing the overall market flirting with the potential loss of the weekly uptrend. That being said, bulls do have a little bit of space to work with, and the fact that SPY has not broken 280 while oil has dumped this significantly is notable, but the odds favor the bears short term in the market at this point. We have a battle awaiting at 280 and then the weekly uptrend level of 277. So that's as important as always, because on days like today, it has significant impact. For example, VFF had a great daily setup for the bulls, ready to go. If SPY were green today or even just flat, VFF, in my opinion, would have a great day and close above $14. The fact that VFF tried its bull break and tried its bull flag continuation into a very weak market day is just the wrong day, and that's just the luck of the draw. Sometimes it works out for the bulls, sometimes it doesn't, but it was overall market weakness that had huge implications on the sector as a whole. So we had a big pullback on CGC and Cron, and there were a lot of people that had a bit of FOMO yesterday seeing the bull moves follow through. But we had to remember, number one, CGC has not changed the daily trend, and number two, we just ran about 10% in 2 days, and getting in at this point is not ideal. So now we're in a scenario where it's up for the CGC bulls to prove themselves. We have the low and the high. That's our range. And actually, look at that rejection from resistance, 46.95, 46.97. But we've been trading within this range now for the last 9 days. If we see the bear break, it's just a lower low, and we have not found our weekly support yet. If the bulls can form a higher low compared to 43.02 and break 46.97, that's the daily trend change that gives us the weekly higher low, and we have to see this follow through for the bulls. Looking at it on the hourly chart, we had a bit of a bounce from the lows of the day, not very convincing at this point. We need an hourly trend change, and then we need the bulls to follow through. So the burden of proof is on the bulls because the bears have had pretty comfortable control over the last month of trading, and with market weakness, we're going to have to see the SPY bulls turn things around a little bit, in my opinion, for the CGC bulls to get that break of 46.97 that they need. And the next few days, Friday and Monday, will be very important for the sector. Cron pulling back as well. Anything above 1445 is a daily higher low. It's a bit of a different setup because the bulls have already changed the daily trend. So we have the higher low, higher high pattern. Bulls have to hold 1445. Our key resistance is now 1655. And on the hourly time frame, very weak bounce. Low of the day, high of the hourly bounce is 1558 resistance. And now the bulls trying for a higher low. We essentially have an hourly equilibrium heading into tomorrow. 1517 key support, 1558 key resistance. I like to play a little game because I'm still in my swing trading position, and obviously a big red day, so that position took a hit after a solid green day yesterday. But the game I like to play is offsetting swing trade pullback losses, which are of course not locked in until you sell, but offsetting it with day trading gains. So I was trading Tesla and oil today, and my goal was to go green on the day to completely offset any red that I had from my IAN and Cron swing positions, which fortunately I was successful in doing. And what that does is position myself really well to continue seeing my account go one step forward as far as value when we do get Cron shifting momentum, when we do get another higher low. So checking in on ACB, bear break. So we saw the red flags on ACB 2 days ago, and now we're just getting followed through. The amount of times we've seen red flags and gotten followed through, I mean, you just got to look at MedMen and all these other names, even the Twitter pumps, CXXI, Tilt, all these names that have just been fading with some weakness, and ACB was one of them. Just in terms of short-term action, the bulls needed follow-through off the daily higher low. The upper wick, certainly not convincing. The daily inside bar yesterday and close at the low of the day, certainly not convincing. And the break of 844 was the bear signal, and bears that entered on that break very quickly made about 2 to 3%. So now at this point, we know we have not changed the daily trend yet. Anything on the daily under 879 is just a lower high at this point. And now we're looking back down to our recent bottom of 801 and 792. I would expect the bulls to hold those levels at least on the initial test as the hourly RSI got oversold, started to bounce at the end of the day. If we did continue with weakness tomorrow, the hourly RSI would get back to oversold very quickly. So I would look for 792 to hold initially, but it's just a lower high that we would be looking for on a bounce. And if this lower high and lower low pattern keeps up, we're going to be heading back down towards that 792 support. APHA, weakness continues. We saw the red flags there as well. Big upper wick, rejection from exponential resistance. No support in sight. The next level down at 624. Anything on the daily time frame from here under 708 keeps the bears in full control with a lower high. If we get down to daily oversold levels again, I'll start to get a little bit interested, keeping in mind that we are looking for a monthly higher low to form on APHA. I would be actually more comfortable if the weekly RSI were oversold as well, and that's not happening anytime soon. So I'm not interested in APHA anytime soon. We'll see how long the bears can ride this trend, which they have had complete control of since these gap downs. And we are making our way back down towards the short report levels. Look at the short report and the reaction from it all, and here we are back down to the upper levels from the bounces of those short reports, or the short report, TLRY. Anything under 50.48 was just a daily lower high. Big upper wick yesterday, bear follow through today. Only support 43.64 is the only support nearby. If we break 43.64, we'll call that level on the daily 48.08 our lower high. Haven't pulled back significantly enough to call that our lower high at this point, but we're on the verge of doing so. A couple supports in the 44s need to break for that to be the case, but the bears are still strong on TLRY. OGI, I'm starting to get interested. Why am I interested? Because number one, we're looking for a daily higher low to remain in an uptrend. Number two, we're coming off of all-time highs. Number three, we're in hourly oversold conditions. So I'm looking for daily higher lows to form, and when we have hourly oversold conditions, that's a good time to start looking. Add the combination of the fact that it's the first hourly oversold coming off the all-time high. That's 2 points in favor of why I want to be scouting an entry here. So I made an entry towards the end of the day on the US side of things, and my entry, one of two that I will be planning, is I got in at 719, so barely green right now. And the way that I play this trade is, number one, if we break 715 tomorrow and get no bounce and we start with further pullback, I look towards 7 psychological, and I will add one time on a $7 psychological break, I would add my second position. The hourly RSI, if that were to happen, would be down in the mid to lower 20s, and that would have me pretty comfortable. Scenario 2 is the bounce starts, and we don't break $7, and we see a bounce cooling off the hourly RSI, keeping in mind that the hourly RSI is the reason I'm in the trade. If the hourly RSI cools off, the reason that I'm in the trade is no longer there. So I want to be scaling out into profit if that is the case. So I'm looking at key resistance of 747. And my trade would be made at this point if we got up to the 740s. That would be over a day maker, so that would be good enough for me. So I'm not looking to smash a home run here. It would be nice if we could break that level and have some confidence on an hourly trend change that our daily higher low is established, and then we would look for a daily lower high, perhaps in the upper $7 range. So ideally, I would like to set a stop at break even and allow this bounce to play out a bit. But the fact that we haven't even started bouncing yet, I'm going to be making my game plan on the fly. The other scenario, which is the most likely, which I do all the time, is exit half of a position. So my entry is 719. Let's say we start bouncing up towards 747 resistance, but that's a little bit of a ways away. That's 3.5% from where we currently stand. So the bulls will be getting a little bit extended when we get to that level potentially. So perhaps I take half of my profit from a 719 position at 739. What that instantly does is allows me to put my stop loss level 20 cents lower for break even. So if I sell half of my position for a 20-cent gain, that drops my break even point for the remainder position 20 cents. It would then be $6.99. That'd be a great place to put it under psychological 7 support. So if I sell half and then put a stop loss at break even, then I can very comfortably patiently wait and see if the bulls can make their way up towards the upper $7 range on a bounce. So that's the most likely scenario, as that's something I often do. TRST, bears continue. We've seen the red flags here, certainly standing out. 740 key support. So what yesterday did is just cool off the hourly RSI. That little bounce was enough to keep the RSI from getting extended, and then actually that was yesterday. So the hourly RSI was oversold yesterday, and then that bounce cooled it off significantly and allowed for another leg down today. And a lot of names did that. IAN is another name that did that on the US side of things, but that's why I scale out. Let's say I was entering the hourly oversold bounce. I scale out because the hourly RSI is no longer oversold. My reason for being in the trade is no longer there, and I better be locking in some partial profit to protect the remainder of my position, because the last thing I want to be doing is stuck holding a position when we get another leg down, and just like that, I'm in the red. So for TRST, it's 740, must hold support. That's our low down here. If we hold 740, anything under 817 is just a daily lower high. And if we break 740, the next support level that we're looking down at is going to be 7 psychological, essentially. HEXO. HEXO is doing exactly what SPY is doing. This is what SPY did today. We have the low for SPY at 280. We bounced. We had a higher low at 282. Lower high, bear break on HEXO today of 665 support. And now we're just looking down at 654 support. Anything under 709 is just a lower high. Look at this chart, and let's just pull up SPY real quick. Same chart. Bounce, higher low, lower high, bear break, but still holding the low from May 13th. HEXO, low of May 13th. Bounce, higher low, lower high, bear break, still holding the low. Actually, we broke it by 2 pennies, but you get the idea. It is the same chart, essentially, which shows us that there is a very significant correlation between SPY and HEXO, and that makes sense as SPY, or as HEXO is traded on the New York Stock Exchange, where we have correlations with bots, and on the OTC, we do not have as many bots, and we do not have as strong correlations. VFF. So like I said, the setup was there. VFF was top watch today. I had an order filled out where I was getting ready to get into VFF first thing this morning, and I saw SPY weakness, and I decided against it. If I am in a trade, the ideal scenario as a bull is my individual name looks good and the overall market looks good. If the overall market does not look good, I have to take the individual name setup with a grain of salt. So we got the bull break first thing with a higher open, and we broke multiple resistance levels. We could not break the final level of 1438, so that was a little bit of a red flag in itself. Still holding on just fine. 1309 is our low of support right now. We bounced off 1320. So again, compared to a lot of other names, it's holding on well, but we can't expect the bulls to see a significant bull follow-through day, especially on a name that's traded on the NASDAQ or the NYSE due to those correlations when SPY is weak, and today SPY was one of the weakest days that we've seen in the recent past. So still just watching this tight range we've been trading within for 6 days, and we'll see if the market bulls can give a more favorable environment for these VFF bulls to try and break out and see some follow through. TGOD, so pulling back now. Let's see what 3 p.m. did. So we had the bulls show up just before 3 p.m. and then it actually got a tiny bit of follow through, so that's good. At least we didn't dump from people not seeing the end of day surge. But either way, we now have the kind of setup where we're looking at anything under 428 as a lower high. We have support down at 385 and 374. The bulls must change. And again, we didn't have a clear daily trend change. You could argue, someone could argue that we did have a trend change on the daily. Some could argue that you couldn't, and no one would be right or wrong. But we still have a clear weekly downtrend. And if we pull back further, it just looks like another lower high compared to 463. So best case for the bulls is hold 13 or make that 385 and break 428 to see follow through. And if we come down and break 374, it's just another lower low and another weekly lower high being set on that daily bounce. LABS, red flag, was the bulls trying to confirm the daily bull flag and rejecting. We were unable to see the continuation, and the bears have taken over. Close at the low of the day 3 days in a row, increasing bear volume, and we pulled back hard. So healthy pullback, attempt continuation, reject, close at the low of the day, bear follow through with market weakness. So now we are shifting momentum. The next daily support is 575, but we want to look at the weekly time frame. The weekly time frame has not seen any clear consolidation since down here at 292. Since then, every single weekly candlestick for 2 months has been a higher low. So if that pattern breaks, weekly consolidation will be underway, and we'll look for a higher low, but that higher low may come in the mid to lower $5 range, just using the exponential support as a visual guide, which has been holding as support. So we do need to be cautious here. Now that we've lost the uptrend, that even when we do bounce, we can anticipate that a daily lower high is likely to form, because at this point, for the bulls to make their way back up to that high, we're talking a 15% plus move. So the more likely scenario would be an hourly oversold bounce, getting a bit of follow through, giving us a daily lower high, and then potentially seeing further consolidation to lead to that weekly higher low trying to be found. Oils. Still tightening up. Still the head and shoulders pattern. So we've got our high, low of 55 as the must-hold support level. That hourly RSI is beat up, but look at these little candlesticks, and this is where the penny stock aspect of things kind of throws a loop, because these little candlesticks are closing 1 penny higher, but it's cooling off RSI levels. So RSI is less meaningful on a penny stock like this because these candlesticks are just little boxes, and you can see just depending on where it closes, that makes all the difference in the world in how the RSI is affected. So that's one reason why I don't really like penny stocks. But if 55 breaks, we have a clear daily trend change. Weekly consolidation will continue to try and form a higher low. If the bulls can hold 55 cents, anything under 72 is just a daily lower high. Key support test tomorrow. VGW, same tightening range to be watching. 490 support, 371 resistance. Our lower high was 475, and now the bulls must form a higher low compared to 371. Hourly oversold bounce. This is where I like to scale in. This is the scaffolding for the trade is right there. If your hourly RSI is down in the low 20s and you have 371 as a key support level, we're making a play based off that support. There's your stop level. You're looking to get in on the hourly oversold conditions. And again, you're not trying to be a hero and hold to a new all-time high. You're just looking for a bounce for the daily higher low to maintain, and you're selling before we set that daily lower high. So if you enter, let's just say in the mid 390s, and if this bounce gets any follow through, we'd be looking to exit after a 2-3% gain. And that's how I trade many setups off of support. RSI on a shorter term time frame, key support approaching, and then just looking for a bounce to maintain within a tightening range in this current instance, which is an equilibrium trying to form. N pulled back hard, opened lower, and gave us a daily inside bar. So at this point, the bulls are attempting, and actually let's just use the daily inside bar. Break 77, and we have to form a daily higher low compared to 70. And if the bulls can break 84, we're looking at the recent high of 89. But the lack of follow through is certainly notable. The entire sector hindered by market weakness today. So I appreciate you watching. Doing the US video now. Gonna end with some praying mantis babies. Praying mantises are great for the garden. They eat all the pests, and they eat all different sizes of pests throughout their life cycle. So I released hundreds of them into the garden, and I saw them everywhere for the first week or so. And they're not good hunters when they start out young, that's for sure. I saw a couple try some strikes at some aphids and ants. Didn't go well. But we'll see if I see them in a month or two when they're bigger. And another really beneficial pest, or another bug, is wasps. Almost all wasps are beneficial to have in your garden. And people don't like wasps, and they think they don't do anything. There are wasps that specifically eat what's the spider with the hourglass? Black widows. There are wasps that eat black widows. There are wasps that eat tons of pests in your garden. So if you have a garden, wasps are welcomed. So that's all I got. Do good things. We'll see you tomorrow. I'm going on vacation to the beach. Videos will probably be sparse over the weekend, but I'll do what I can.